Hello and welcome to the first episode of Market Watch in 2018. So we wish you all the very best and prosperity in year 2018 to our viewers. So today we are going to discuss about the current developments in money market. We have seen in 2017 there was a bit of a challenging sort of a money market situation. So with me today Mr. Shashika Ranasinghe, the head of treasury at Cargill's Bank, to discuss about the new developments. Welcome back to the Market Watch, Shashika.
Thank you, Prasanna.
If you look at the 2017, we have seen a lot of challenges in terms of the tight monetary policy and tight fiscal policy, which really hindered the growth prospect as a whole. So if you just recap the 2017 situation and how does it, or rather how the 2018 looks like in terms of the money market, can you just explain us a bit?
Absolutely. But 2017 was a mixed bag. On one hand, we had the goods and the bads. Well, in terms of the goods, we had the rating upgrade by S&P.
Okay.
Whereas Moody's, it was the complete opposite. They downgraded. They rather maintained it at negative. Whereas S&P, it was upgraded to a stable outlook. Then on the other hand, we had the IMF third and the fourth tranches coming in last year, which was very positive, and with that we saw some foreign inflows coming as well. And then there were sovereign bond issues, and on top of that the port transaction, which all went well. But in spite of this, we also saw the trade deficit as well as the budget deficit widening. The remittances slowed down. But on the other hand, the government holding of securities which was at one point around 300 billion, came to almost zero. That was also very well managed by the central bank. Yesterday they released the roadmap, and according to the central bank, they have purchased $1.7 billion from the market. So when the central bank buys dollars, rupees gets released to the market, but these rupees did not idle. They sold what the securities they had, and the rupees were absorbed. So there is no actual inflationary effect. Also, the port transaction, the money is going straight away to cover the foreign debt that we have. So the exchange rate impact has been managed to a great extent. While all that was going on, we also saw about 3 rate hikes from the US. Rates started at 0.5% and it ended up at 1.25%. So 3/4% hikes last year. The last one being Janet Yellen's last meeting.
Yeah, in terms of the money market liquidity, Shashika, how does it affect now? I saw the money market liquidity has been, at a sort of a good level, right?
Yes.
So that has really eased off the interest rate pressure in the current context. So what do you expect going forward? How does it change? Or will it really stabilize at current level, or what would be the expectation in terms of the money market liquidity and the interest rate impact on that?
You're quite right, Pastor. From about mid-July last year, the market liquidity turned positive and remained positive. On average, it has been plus minus 20 billion.
Okay.
And from April last year, the 1-year treasury bill, which was going at around 11.20, dropped right down about 11.10, dropped right down to about 8.90 yesterday. So that's a 2.2% drop over a period of 8 months, which is quite steep. And across the board we saw a parallel shift downwards in the yield curve. So the bond market has done very well over the last 8 months. How long this rally will last, your guess is as good as mine, but I think there is more money to be made. The positive sentiment is what drove the bond market. We saw a lot of foreign buying and foreign interest in bonds, which was followed by a lot of local buying. So that drove the bond market down. Yields were all down.
Right. So still that means still you can see the healthy inflows from the foreigners to the government securities market going forward also. Is it a safe assumption?
Correct.
Shashika?
Yeah, and this is all in spite of US rate hikes.
Right.
So probably they don't expect the Federal Reserve to hike rates aggressively.
But again, the Federal Reserve said a 3 round of hike can be expected in 2018 also.
Correct.
So how does it affect now with the interest rate hike in the US side? Again, how does it affect the bond yields in Sri Lankan context, Shashika?
Well, one thing is we may have to be on par with the Federal Reserve in terms of rate hikes.
Okay.
at some point we may have to hike rates, but may not be as aggressive.
Okay.
Because last year we did not follow the Federal Reserve. Although they hiked rates, we were able to manage our interest rates at manageable and sound levels.
Yeah.
For as long as we maintain the fiscal discipline and the correlation between fiscal policy and monetary policy, for as long as there is no clear divergence, we should be able to do well and manage with reasonably low interest rates. Now that the central bank is targeting inflation, and they expect inflation to come down.
Right.
So I don't see interest rates going up.
Right. But still, if you look at the inflation point of view, I think it's now 7.6%. Am I correct?
Correct. Yes.
Yeah. If you look at the pressures come from the supply side shocks in terms of the commodity or other not really the supply in domestic conditions,
Right.
especially due to the weather condition, and again the commodity prices have been increasing, that affected the inflation as well. So do you see some ease off in these conditions going forward?
A lot will depend on oil prices as well. From last September, oil has gone up, been going up gradually. It's now above $60 a barrel.
Right.
Given geopolitical tensions, supply disruptions, lots of things can go wrong with oil. But for as long as it remains at around current levels, we should be able to manage with current interest rates.
Right.
And inflation also should ease off. According to central bank projections, it should come down to about 4% to 6% range.
Right.
So there might be a further drop in interest rates.
If I just ask you, what kind of a drop can be expected? Maybe 50 basis points or 25 basis points? Can you just throw a figure?
Well, I'm not saying there'll be a rate cut, but we might see bond yields coming off a bit more, with aggressive buying in the market still prevailing.
Right.
Also, the weather is going to play a very important role. If weather is adverse as last year, controlling inflation might be really tough, but that is beyond our control.
Okay, now if you look at the currency, I think the Hambantota port, I think first tranche came into the picture, and the reserves have now strengthened around $7.9 billion as at the end of 2017.
Yes.
So in this particular context, I think it's a very healthy amount of reserves. So going forward, what would be your idea on the currency? Will it further depreciate, or will it stabilize at this particular range? What would be the likely idea, Shashika?
We've seen a lot of stability over the last 2 to 3 months. The last quarter was very stable in terms of exchange rates. But over the last 1 week, we've seen a steep drop in the exchange rate. The rupee has weakened by about 1 rupee almost. Overall, if you look at it, the dollar has taken a beating internationally. So perhaps the Sri Lankan rupee is currently having a negative correlation. That might turn positive depending on the monetary policy framework and the outlook for interest rates. But for now, we might see a gradual depreciation. But having said that, I think this might be the top. We might see interest rates coming, the exchange rate also coming down a bit, because the central bank and the cabinet has just approved a $3 billion sovereign SLDB bond, as well as a $2 billion sovereign bond, so $5 billion.
Right. So that means by the mid 2018, we can expect some kind of inflows from the international capital markets.
Correct.
Around 5 billion.
In fact, the central bank is very keen to get the money up front, early 2018, so that the pressure will ease off, and in terms of fundraising, and we might be able to lock in at a lower rate before the Fed hikes, which will be very much in our favor.
Right. So then that means if you just throw a figure, right, 157.06, what would be the tentative range where we can expect the rupee to hover?
I would say for now 154 might be the cap, and on the bottom side 153. So we are talking about a very narrow range of about 1 rupee.
Okay.
But having said that, if either side breaks, we might see further either strengthening of the dollar or the weakening, which can be quite steep.
3rd of January, the central bank governor came out with his roadmap for entire 2018.
Yes.
So in that context, how the country's monetary policy is going to be reshaped? or any new developments can be expected? Now you said the rate hike can also be expected depending on the US rate hike also.
Yes.
So any idea on the for the next 6 months how the monetary policy is going to be behaved?
Well, I think given the current context, the central bank is pretty happy with interest rates and inflation, and they expect inflation to come down, as I mentioned earlier. So I don't see a need for a rate hike immediately. Perhaps if private consumption patterns change and we see credit growth beyond comfort levels, we might see a rate hike, but not right now. So for the next 6 months, I think there will be some stability. But having said that, we have seen that AWPLR has been quite resilient, stubbornly resilient, and it's holding at around 11.5%. It went to about 12.20, bottomed out at 10.90. In between, it has been steady at about 11.5.
Right. For the next 6 months, what would be your tentative range for the AWPLR to have?
I would say 11.5 to 11.
Right.
With a mild downward bias.
So that means we don't see any sort of a sizable deviations in AWPL that will stabilize at this particular range then, right? That's a good news for the investors as a whole.
Correct.
From an interest rates point of view, right?
Yes.
Yeah. And in terms of the global developments, apart from the US rate hike, you talked about the rate hike, and any other developments which affect the local sentiment, Shashika?
Of course, the Federal Reserve rate hike and the major central banks are also on a tightening bias. On top of that, what was interesting was alternate investments. Take for example Bitcoin. It was around $4,000 at the beginning of 2017, went right up to $19,000. Today it's down to 14,500. Where it will end up, no one knows. Also, it's now trading on the futures exchange in the US.
Right.
And also other investments like art. There was a painting of Leonardo da Vinci which recently traded at $450,000.
Right.
So we might see some shift towards such investments. Given that there is a lot of stability in other markets, perhaps there might be more speculative investments going ahead.
Right.
But one thing is for sure, we can expect a lot of volatility this year.
And in terms of I think the local context to the election year, right?
Yes.
So we might see some kind of a fiscal slippage also, but that will be negatively impact to the overall macroeconomic dynamics too.
Yes.
But having said that, as per the conversation I had with you, what we end of the day concluded is for the next 6 months at least we can see some kind of stability in terms of the interest rate and the currency. I think that's a good news for the equity market investors also, because we are thinking about a well stabilized sort of a macroeconomic climate at least for the next 6 months.
Yes.
I would say. Yeah. Thank you very much for the viewers at home, and see you next time with Market Watch. Bye bye.